Okay, in the previous recording I dealt with the price. Just for some historical information, life insurance was invented in 1583 when a one-year term policy was sold on William Gibbon, and for 180 years all the policies were yearly renewable term. Okay, now that pricing structure led to the failure of life insurance, and the reason is simply, like I've explained in the previous recording, the cost starts out slow, then it increases exponentially toward the end of life. And what happened towards the end is a lot of people, we have policies right now sold by companies that advocate in term, where in 1 year alone people will be asked to pay $980 for $1,000 of coverage, right? At that point, if you're in good health, you'll say, I might as well keep my $980. Why pay $980 to get $1,000? So that is what happened, and people who were in good health decided that, why pay so much? In 2 years I can pull enough money to pay the $1,000. And it was only those who were terminally ill who would continue. And this is what is called anti-selection, and this caused the companies to go bankrupt. And as a result, another method had to be found. If they didn't find it, they would have had to abandon life insurance like they did fraternal, like the fraternal societies had to forget about the insurance that they had, because it wasn't based on sound pricing. So that's what happened. So term was first, but it failed, and another formula had to be found. And then they started to average it to like the 5 years, the 10 years, the 15 years, and then they end it at a certain point in time before people start selecting. They say that's why you'll have term to 75 or term to 85. So they had to cap it, because if they did not cap it, the company would go bankrupt. You wouldn't have an industry. That's just how it is. And some people think that was fair, and they decide to develop the whole life. They were trying to get something that was more equitable, more fair, and the whole life was developed. So you have something now that will cover you right through life. Now, the advocates of this crazy idea of buying term try to justify their strategy by telling that people only need life insurance for a term, for a short period. Right? Now, that is the most nonsensical idea I've ever heard. And you think about it. You will insure most of your valuable asset indefinitely, for as long as you own them. If you have a mink coat, you insure it. If you have jewelry, you insure it. If you have your house, you insure it indefinitely, right? If a fairy godmother come and tell you that your house will burn, you're gonna insure it, right? You would not insure your house until the kids are grown and gone. You would not insure your house until the mortgage is paid off. You would not insure your house until, let's say, the house valued $300,000. You wouldn't insure it and until you have $300,000 in the bank. Then you would stop insuring it. That would not be financially prudent. That would be nonsense. Because when you have a house valuing $300,000 and you have $300,000 in the bank, you are worth $600,000. If your house is destroyed, you would have lost half your value. So the prudent thing to do is to have insurance on your house for as long as you own your house. Okay? Now, if you can do that for your house, why wouldn't you do that for yourself, which is the most valuable asset you will have? You are the most valuable asset to you and to your family. When you die, there will be a financial loss. So even if you have $1 million in the bank, if you have some insurance, it just means that your family will be that much more better off, right? So the idea about, oh, you know, to keep life insurance for life and you just keep it for a term, it's sheer hogwash they use to justify the selling of term. Because it makes no sense. Go back to the house. Even if the savings does materialize, you have $300,000 in the bank, right? And you have a house value of $300,000. You want to take the insurance off the house so that when your house burns, you know, you have to then use the $300,000 to replace it. That doesn't make sense. You would have worked hard, accumulate $600,000 worth of wealth, and then just watch half of it disappear like that, right? The same thing applies to a life. The life, the most valuable asset. So even if you accumulate the savings, it's nonsense. Having life insurance makes sense at all times. And if you read my book, you'll see some of the other reasons why you need life insurance. You should read my book. It's called Life Insurance: The Cause of Economic Prosperity. It's available at exlibris.com or at most online bookstore. You should get your copy. It's packed full of information. I'm going to share some more with you, but the book will have even a lot more.